Dear friends, in this video we will talk about types of inflation and benefits and drawbacks of inflation. Inflation is an increase in prices, which could be converted as the decrease of buying power eventually. The rate of which buying power falls can be shown in the average price raise of a package of chosen products and services through some time period. Inflation is occasionally categorized into three forms: demand pull inflation, cost push inflation, and built-in inflation. Now, we will explain in detail these three types. 1. Demand pull inflation happens whenever a raise in the provide of funds and credit induces the general demand for goods and services to raise more quickly than the economy's production capability. This raises demand and turns to price goes up. When individuals have more cash, it results in optimistic customer emotion. This, in return, causes higher investing, which brings prices increased. It produces a demand-supply hole with increased demand, and less adaptable supply, which leads to increased prices. 2. Cost push inflation is a consequence of the raise in prices, operating via the manufacturing procedure inputs. While additions to the supply of cash and credit are channeled into a commodity or other asset markets, prices for all sorts of intermediate products increase. This is particularly apparent when there's a bad economic impact to the provide of essential goods. All these trends result in greater expenses for the carried out product or service, and perform their way into growing customer costs. For example, when the cash offer is widened, it produces a speculative growth in oil prices. This indicates that the expense of energy can go up, and lead to increasing customer prices, which is shown in numerous steps of inflation. 3. Built-in inflation is associated to adaptive anticipations, or the concept that people count on present inflation rates to go on in the future. While the cost of products and services increases, people might assume a constant increase in the future at an equivalent rate. As a result, employees could need more expenses or salaries to keep their standard of living. Their elevated salaries outcome in a higher price of products and services, and this wage price get out of hand remains, as one element induces the other and vice versa. Benefits and drawbacks of inflation. Inflation is often interpreted as sometimes a good or a bad issue, based upon which part you takes, and how swiftly the switch takes place. Advantages. People with real property, like property or stocked goods, listed in their home currency, might prefer to see some inflation, since that boosts the price of their assets, which in turn they can promote at a higher price. Inflation usually results in speculation by companies in high-risk projects, and by people who invest in organization stocks, since they assume greater earnings than inflation. An ideal level of inflation is generally offered to stimulate investing, to a specific level rather than saving. If the purchasing power of cash drops with time, then there might be a higher motivation to invest now as opposed to saving and spending later. It might raise investing, which might increase economic activities in a country. A healthy method is considered to maintain the inflation rate in an ideal and attractive range. Disadvantages. Purchasers of this kind of assets might not be pleased with inflation, because they will probably be required to spend more funds. Individuals who keep investments evaluated in their home currency, like cash or bonds, might dislike inflation, since it erodes the genuine worth of their holdings. As a result, investors seeking to secure their portfolios from inflation will need to look at inflation-hedged property classes, for instance gold, commodities, and real estate investment trusts. Inflation-indexed bonds are one more well-liked choice for traders to benefit from inflation. Higher and varied rates of inflation can enforce huge expenses on an economy. Companies, employees, and customers should all be aware of the results of usually increasing prices in their purchasing, marketing, and planning decisions. This presents an extra source of doubt into the economy, given that they might speculate wrong regarding the level of future inflation. Time and assets expended on exploring, calculating, and modifying economic conduct are estimated to go up to the basic level of prices. That's compared to actual economic essentials, which undoubtedly signify a cost to the economy in general. Actually, a low, steady, and easily foreseeable rate of inflation, which some look at otherwise ideal, may cause significant issues in the economy. That's because of how, where, and when the new funds gets into the economy. Anytime new cash and credit gets into the economy, it is usually into the hands of particular people or organization firms. The procedure of price level adjustments to the new money supply proceeds as they then invest the new funds, and it circulates from hand to hand and account to account through the economy. Inflation does push up some rates first, and pushes up other prices later. This sequential adjust in buying power and rates, identified as the Cantillon effect, signifies that the procedure of inflation not only raises the typical price level over time. However, it also distorts relative prices, wages, and rates of return along the route. Economists, in overall, realize that distortions of relative prices out from their economic stability are not great for the economy. Dears, this is what I wanted to tell you about types of inflation and benefits and drawbacks of inflation. Don't forget to comment, subscribe, and like. Thanks. See you soon.